Hi, welcome to the May 2016 Downtown Pittsburgh Investors Business Daily Meetup. My name is Eric Rossi. I'm a co-organizer for this group. And if you're not already a member and you want to find the group's page on Meetup, you can follow the link on the cover slide here. So the mission statement for this group is to educate individual investors about the CAN-SLIM investing strategy. So that means identifying the best educational material that's available, whether it be books, articles, webinars, etc. And this presentation is educational in nature. This should not be construed as recommendations to buy or sell any securities. Investing in stocks does carry substantial risk, and you can lose your principal. I'm a non-professional volunteer investor, and Investors Business Daily, IBD, and CAN-SLIM are registered trademarks of Investors Business Daily, Inc., and Meetup is a registered trademark of Meetup, Inc. Here's the 5 topics for this month. We'll go through the market dashboard as usual. I'll talk a little bit about Swing Trader, which is a new product, a premium service that IBD is offering. And the main topic is talking about creating an investing plan. And then we'll go into a market analysis. We'll look at a couple stocks, and then we'll conclude. Okay, so this is as of the Memorial Day weekend. The big picture is the market pulse is in a confirmed uptrend, so this gets a green, and that happened just last week. So this is a recent change. It was uptrend under pressure for quite a long time. And the uptrend health, since the first 4 weeks of a new uptrend are tend to be where most of the breakouts occur. This uptrend has been going since February 17th, so it's 101 days old. So this is pretty long, one of the longer times I've seen without the market going into correction at all. So this gets a yellow since we're still in an uptrend, but it's been such a long time. Distribution days, we have 6 on each of the major exchanges, so that gets a red. And Fed activity, the Fed, there was a little talk from the Fed last week about interest rates, and they're sounding a little more like they're going to pull the trigger on another rate increase pretty soon here. And they did increase rates in December for the first time in about 7 years. So this gets a red since interest rates are increasing. The S&P 500 has a C+ accumulation distribution rating. Same thing for the NASDAQ. So I gave both of those a yellow. The IBD 50, which is a composite of, it's basically a composite chart of all the IBD 50 stocks at any given time. This index just crossed above the 10-week and the 40-week moving average last week. It's still slightly down for the year, and it's underperforming the NASDAQ and the S&P 500. So I'm giving this a yellow since it was just red. It's going to have to, I'd say, get into positive territory for the year and give a few more weeks above the major moving averages, and probably a week in heavy volume accumulation. Our last bull market the current bull market started in March 2009. We could be transitioning to a bear market. It's kind of uncertain. We don't really know yet. But this gets a yellow since we're in a bull market, but it's been going on for a long time. The last bear market ended in February 2009. Historically, this is a pretty long time without a bear market, 7 years. So we're overdue for one. So this gets a red right now, because the longer this bull market goes, the more likely that we're going to run into a bear market at some point. And intermediate corrections, which are corrections in the 10 to 15% range, we were at 9 of these in the current bull market since 2009. So again, this is a high number, and I give this a red as well. So overall, we got 1 green, we got a few yellows, and we got a bunch of reds. So not very good overall picture for growth stock investing. So IBD launched a new premium service this month called Swing Trader, and you can see it here in the red box. It's right next to Leaderboard on the Investors Business Daily homepage. And Swing Trader, it uses CAN-SLIM concepts in terms of screening for stocks that are showing strong fundamental and technical action. And the way that Swing Trader is different than a product like Leaderboard or their traditional CanSlim books and that is that it takes advantage of shorter term trends. So typically, if you follow Leaderboard or you follow How to Make Money in Stocks, they talk about a 20 to 25% profit goal and a maximum stop loss of 7%, 7 to 8%. So with swing traders, since they're taking advantage of shorter term trends and they're shorter term positions, you're going for smaller profits as well, which means that smaller profits means you need a smaller stop loss to keep that 3-to-1 ratio of profits to loss, of profit goal to stop loss. So most profit goals are in the 10% range, and most stops are in the 3% range. And this is actually how I've been trading for the past few months. I've been doing swing trades, and it's working a lot better right now than going for a 20 or 25% gain, which hasn't worked very well for the past couple of years. So the trades can be a matter of days, or they could be a couple weeks. One nice thing about the swing trader is that all the prior trades that they've recommended are available for review. So if you're a Leaderboard subscriber, after a period of time, you can't go back and look at something that was on Leaderboard a year or 2 years ago. So with Swing Trader, they're keeping all the trades there, so you can go back and look at any time. So I like the transparency there. You can see what the real performance was. And there are alerts available. You get a push notification to your phone. If you use MarketSmith, you'll know you'll get something similar. I get this with MarketSmith when alerts triggered. I get a push notification to my iPhone. And the price of Swing Trader is the same price as Leaderboard. It's $69 a month. I don't know if there was an option to pay for the full year and get a little discount. I know with Leaderboard you can do that. So that's just a little intro to Swing Trader. And if you want to learn more, there's a webinar on the How to Invest portion of IBD videos. And I've boxed it here so you can see what it looks like. And it's an hour, and I recommend checking it out. They'll show you some example stocks. They'll show you what the system looks like, what's some typical performance in terms of winning and losing. So just another tool to consider adding to your overall investing strategy, especially if you're shooting for 20 or 25% gains and they're not really working for you. And if you work for a living like I do, it's hard to swing. It's hard to day trade because you really need to be in front of the computer at least in my opinion. You need to be watching the stocks very closely. So I think day trading is tough unless you trade for a living. So I think swing trading is a nice compromise between day trading and position trading. And given the choppy market action right now, where we're not getting long uptrends, I think that this is a good strategy to be deploying right now. And like I said, this is working pretty well for me. I'm not using Swing Trader, the service, but I'm investing the same way right now. Okay, next topic is about creating something called an investing plan. So what is an investing plan? It's a written document that talks about your individual plan for investing your entire portfolio. So it talks about, this is something that's going to talk about what's your buying strategy, what are your sell rules, what type of strategies are you going to use? Are you going to day trade? Are you going to swing trade? Are you going to use options? Are you going to use ETFs, mutual funds, etc.? And you might wonder why bother creating one? Well, if you don't have your plan written down, then when you get to a point where you want to make an investing decision, you might be acting based on emotions. And acting based on emotions is really a recipe for disaster, because your emotions will really cause you to make bad decisions in investing. And it's one of the main reasons that a lot of individual investors don't do very well, because they don't have a written plan and they don't have written sell rules. They fly by the seat of their pants, and they do what feels right in the moment. And once you get into a trade, your judgment really gets clouded because your money's on the line. So we need to counteract our emotions. We need to fight against that by having written strategies that we can refer to and then follow. So the following are some items to consider for your individual investing plan. Why do you invest and what do you hope to gain from it? So are you investing just to make some extra money on the side? Are you investing because you want to put that money towards a vacation or your kid's college fund? Or are you investing for a living and this is the way you pay your bills and your health care and all that? And another question is, what do you hope to gain from investing? Are you doing it because you strictly for money, or do you enjoy the challenge? Do you enjoy the emotional ups and downs of the market? So this is an important place to start about why do this in the first place. Another good question to ask is, which strategies will you use? Will you use day trading? Will you swing trade? Will you do position trading, such as the way it's described in Bill O'Neill's book? Will you trade mutual funds or ETFs? So there's a lot of different strategies out there. So which ones will you use and in what proportion? So maybe you're going to day trade with a quarter of your portfolio, and maybe you're going to swing trade with a quarter of your portfolio, and then another quarter to position trading, and then finally the last quarter to mutual funds. You could split this up any way you want based on your individual preference. You also want to have in your investing plan a discussion about portfolio management. And under portfolio management, you want to have things like drawdown rules. How much money are you willing, at what point will you stop trading for the day or the week or the month, etc., if you have a string of losses? So if you day trade, for example, if that's part of your strategy, you might say, if I lose $50 in a given day or more, I'm going to stop trading for that day. Or you might say, if I lose $1,000 in a week, I'm going to stop trading for that week, and I'm going to wait till the next week. So this is important to protect to limit your downside, limit the amount that you could possibly lose in a given time. You also want to talk about the allocation of your portfolio to each strategy. Like I just mentioned, you could say that your portfolio is going to be divided into, you're going to invest a quarter of your portfolio in 4 different strategies. Or maybe you want to say, I'm going to day trade with half of my portfolio and I'm going to position trade with the other half. So again, it's up to you. It's a personal preference. There's no right or wrong answer. But it's good to have this written down. And it is a good idea to have some of your money in mutual funds for a longer term investment. In other words, you wouldn't want to take your whole portfolio for aggressive day trading or something like that, because you do want to have some long-term money in your portfolio. You want to talk about or identify the maximum number of positions that you'll carry. So there's some guidelines in Bill O'Neill's book, How to Make Money in Stocks. Generally, for position trading, you want to limit yourself to around 3 to 5 stocks. It's probably no more than 7 or 8, because it just gets too hard to keep track of all of them. And if you work for a living, it's even harder. So if you trade full time, you can probably have more positions that you keep track of, as opposed to if you work for a living and you're just trading on the side. And you might want to say, if I'm day trading, I'm only going to have 1 day trade at a given time. You also, if you're trading for a living, these last 3 bullets are important. What's your daily profit goal? And what's your weekly profit goal? And monthly, and so on. Because if you have a plan, you want to make $100,000 a year in trading, you need to have some way of tracking that you're going to get there, or to know if you're falling behind so you can figure out what you're doing wrong. So if you trade for a living, this is really important. If you don't trade for a living, I don't think this is so important, but it's something to think about. How much money do you realistically want to make in the market, and how many trades do you have to put on, and how much do you have to make on each trade on average to meet your goal, your income goal. So like I said, you want to target average return per position. That'll tell you that, along with the number of trades you make per year, will let you set a profit goal for your positions. So that way you'll know how big of a position do you need to take. and how does that align with how much money you actually have and the level of risk that you're willing to take on. In your investing plan, you also want to talk about your buying strategy. So what are the standard buy points that you're going to use? And this would be for bases like a cup with handle or a double bottom. What alternative buy points are you going to use? Are you going to use a sloping trend line, for example? Are you going to use a shakeout +3? There's these alternative buy points that can get you into a stock earlier than the standard buy point. And then there's add-on buy points. So if you own a stock and it forms a 3 weeks tight pattern, or it bounces off the 10-week moving average, you want to have a list of what points will you add to your position, and then how much will you add to your position when one of these is triggered. Will you add 10% to your position? Will you add 20%? And then you also want to talk about, and you also want to have your pyramiding strategy down. So maybe you're going to buy a half a position on your first buy, your B1, and then you're going to add a 25% position on your B2, and then another 25 on your B3. And how are those going to be spaced out? Some people will do a B1 when the stock hits the pivot point, and then they'll do a B2 when it goes up 2%, and then a B3 when it goes up 4% from the buy point. So all these are all things that you want to define in your buying strategy. How are you going to go about buying stocks? And then I would say equally, if not more important, is your selling strategy. What are your sell rules that you're going to follow for each of your strategies? And you need offensive sell rules about when you're going to take profits, and you need defensive sell rules about when you're going to cut your losses and move on. What services are you going to subscribe to? Are you going to subscribe to investors.com? Are you going to subscribe to MarketSmith? Are you going to think about some of the premium services like Leaderboard or Swing Trader? Or are you going to use there's plenty of other services out there that aren't affiliated with IBD. Are you going to use some of those? How are you going to continue your education? Are you going to read certain books? Are you going to listen to a certain number of webinars each month? Are you going to watch videos like this one? Are you going to attend a meetup? So these are all good tools to keep continuing your education in this. And then how are you going to do post-analysis on your trades? Which of your setups are working best, and which ones are not working? You can say, okay, I bought 5 cup with handles, I bought 3 double bottoms, and I bought 6 flat bases. Which one is doing the best? And then you can start to look for the bases, the setups that are doing best, and try to focus on those. Did you follow your sell rules for each of your trades? Or did you make an impulse decision based on emotions? And this is a really good point here that I got this from, I think this was from John Carter's book. If you took a loss, then why did that happen? Actually, no, this was from Nicholas Darvis's book. I thought this was really good for post-analysis, to really reflect back on if you did take a loss, why did it happen, and what could you have done to prevent it? Because you can learn more from your losses than you can learn from your winning positions. Okay, you also want to define your routines. Are there certain routines you're going to run through before the market open each day and then after the market close? Do you have what things you're going to do on a weekly basis on the weekend? You might want to update your watch list at that time. You might want to read the EIBD. Monthly, you might want to do a little performance review of how are each of the setups working? How are they doing? Which ones are doing well? Quarterly, you might want to look at how's your overall portfolio doing and compared to the market. And you might want to just list out all of your trades, what was the percent gain or loss, and just take a step back and see how are you doing overall. And same thing on an annual basis. Your investing plan should also talk about how's your home office going to be set up. Are you going to have a backup computer? Are you going to back up your hard drive? I have an external hard drive. I back up my computer once a month. If you trade for a living, you probably want to do it much more often than that. Are you going to have 4 different screens to look at? Are you going to have a desk where you can sit for part of the day and stand for part of the day? Are you going to have a backup, a battery backup for your computer in case you lose power? Does your iPhone have hotspot service in case you lose your internet? So these are just some things to think about. Probably, like I said, more important if you trade for a living. Less important if you're trading while you're on your day job. Then you have less control over these things. You also want to identify your watch list management. So which watch lists are you going to keep, and how are you going to manage them in terms of how often to update them, and how are you going to screen stocks and determine which ones go on your watch list and then which ones don't. So that's all I want to talk about with the investing plan. And if you want to learn more about this or see an example, there's a book called Mastering the Trade by John Carter. And this is where I really thought, discovered this notion of an investing plan and started creating my own investing plan, which I'm still working on. But this book has some examples, and he also has, supposedly he puts his latest version on his website, although I didn't go verify that. And one thing to keep in mind is that this book does focus more on day and swing trading. So if you're a strict CanSlim student and you haven't branched out into anything else, this book has a lot of different strategies that you might not be comfortable with. But if you want to learn about day trading and swing trading, I think this is a good book. Okay, for the market analysis. So we've been in a confirmed uptrend or an uptrend under pressure for about 14 weeks now, and that's a long time. This is one of the longer uptrends that I can remember since I've been following the market really closely the past 2.5 years. The NASDAQ right now is approaching some resistance that it hit before around 49.70, and if it breaks through this level, then the next level to watch for is going to be the 5,000 level. Recently, the NASDAQ did break through the 50-day and the 200-day moving averages, so that's a sign of strength. But the volume has been declining as the index goes up, and that's not what we want to see. So it's wedging. We'd rather see it increasing in some decent volume. So it's looking better, but I'm still very cautious because I want to see some better volume come in as the index is moving up. So overall, it's okay to own stocks right now, but you probably want to limit your exposure. So I don't think it's a good idea to be heavily invested right now. You might want to have a percentage, 10, 25, 30, whatever percent of your portfolio invested, and a good portion of it in cash until we get a little more certainty on where the market's going. And it's a good idea right now to keep tighter stops than normal and to take your profits sooner than normal. And I mentioned earlier, I'm kind of following the swing trading philosophy right now, where I'm taking profits at 10% and I'm using 2 to 3% stops. And this is working pretty well. I've had about 3 stocks that hit the profit goal, and then another one that nearly hit the profit goal. So some of my recent winners, at least, using that philosophy, were NVIDIA, Weibo, and TransUnion. Those all hit the profit goal, and I sold those for about a 10% gain. And Facebook and PayPal were a couple that I had to sell for defensive reasons. They just weren't moving. They weren't doing what I wanted them to do. So I'm going to switch over to MarketSmith for the rest of the market analysis. We'll look at some charts. Okay, here's a monthly chart of the NASDAQ, and same thing I followed last month. So in the past month, you can see we've got, this was a bit nice support week here, and I'm sorry, this is the monthly. So this was the past month right here. So it's up for the month in average volume, and like I said, we're approaching the 5,000 mark, which has been some recent resistance there. You can see that we had this really long uptrend that was holding for a long time, and it broke that uptrend line last August, and it hasn't. And ever since then, it's been going sideways, and it's been pretty choppy and loose. You can see how the monthly swings are a lot wider here than they were in this region. So a good reason to, again, be cautious. We look at the weekly chart. So we recently had this kind of double bottom type look here where we had a low and then undercut here. And you can see we've rallied up. Last week, the NASDAQ broke through both the 10-week and the 40-week, but volume was low. You can see volume's declining here as it's going up. So right around here, we hit resistance before at 49.70. So keep an eye on that as this continues to go up. Right around here again, here's the 49.70 level. And then 5,000, just because it's a whole number, is going to be another level to keep an eye on. If we go through that, then we'll be looking at what happens around this 51.75 mark. And this around here, around 5,200, is starting to coincide with the all-time high back in March of 2000. You can see we were at 51.32. So somewhere around here, which you can see it hasn't spent much time above those levels in the past year and a half. So that's NASDAQ, S&P 500. It's above. This one has a little more room, a little more daylight between the 50-day and the 200-day moving average. You can see that we hit resistance here around 2100 several times here, and then it never really, and then it kind of hit resistance around this mark, around maybe 2130. So those are some points, some key resistance points to watch for here. Right now, you can see we're right at the 2100 mark, almost on the money. So this is going to be really key to watch. Does it punch through there and go higher, or does it hit resistance and turn around? Look at the Russell 2000. Russell 2000, this one took a much deeper dive than the NASDAQ, and it actually was in bear market territory. It actually corrected. You can see we had one leg down, we had two legs down, and it was a 27% decline from here to here. So that was in bear market territory. Given the length of this, the number of months that this took place, and the amount of the correction, the Russell was in a correction, or in a bear market by the IBD definition. So right now you can see this one, this is trading above the 50-day and the 200-day. You can see same thing here. Volume is tapering off as we're moving up. 1156 is going to be a key resistance point here to watch for, or around 1160. And after that, you want to see what happens around 1200 if it keeps going. And then likewise 1300. Those are some of the key resistance points to watch there. So some recent winners I'll show you. NVIDIA is one. So this stock, I actually bought this down here on a sloping trend line of this cup with handle. And this was a second stage cup with handle, pretty nice base. We had a couple gap ups in here, and you can see that the handle formed in light volume, and it was a very orderly pullback and very tight too. So this was, I like the look of this one when I saw it. So I bought this, and I ended up taking my profits somewhere around here when it hit a 10% profit goal. And then I would have got out anyways before the earnings report. There was an earnings report here that happened on May 12th. So that's what this gap up was on the earnings report. So I would have sold before the earnings report anyways. I just think it's right now it's very risky to hold through an earnings report. If you really want to buy something, own something, have a chance of owning it on the earnings report, you could try buying a call the day before to limit your risk a little bit. But you just never know what's going to happen with these things. I mean, this one gapped up 15% to a new all-time high, I believe. Yeah, to a new all-time high. So that's great, but you just never know. And on NVIDIA, this thing has made a big move. And yeah, you can see from here, it's around 12, and now it's up to 46. It's making a pretty big move here, and this, you can see how it's kind of going parabolic here. This is shooting up pretty steep. And you can see all of these up days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 of 11 up days. So this is looking a little bit climactic, but I'd have to go look at the definition of a climax top to see if it really meets that. But it's certainly kind of going parabolic, and it's more evident on the weekly chart. But the stock is, right now, it's doing well. It's very strong. I would love to see this thing form a climax top, and then I'd be looking to short it after that. Just me personally. TransUnion was another good one. And again, this one, I bought this on a sloping trend line, and this thing came up, and it was, you can see it was kind of hitting resistance a couple times around the 28 mark, and then it gapped up on this day here. I believe that was an earnings report. Yeah, that was an earnings report. I think I had actually bought it and sold before the earnings report, and then rebought it here. And then from there, it went up, and it, consolidated a little bit here. It never even came close to touching the bottom of this gap up day. And you can see how it held the 10-day. It's still holding the 10-day really nicely, and it's 22% from the pivot down here. So this one's been doing great, and I did take my profit on this one and moved on. But I am watching this. If it does come back and form another base, I'll probably give this another shot, because this was a first stage base here. So even a second stage base is pretty attractive. And Weibo is another stock that's been doing well lately. And I bought Weibo on the sloping trend line on the handle here. And so I bought it on this breakout day here. It was up 12%. That was probably an earnings report. No, it wasn't. But you can see this thing ran up, and it held the 10-day line really nicely. And I did take my profits on this one as well. And you can see that it came back, and it corrected a little bit here. It formed like a little cup here. And I marked it here, marked as the high here. So as it broke through, it hit resistance here around 2480, 2470. Broke through here. I actually rebought this. I bought it this day when it was up in heavy volume, and it broke to a new high, and it broke through this prior resistance area. So I'm still liking Weibo, and it's out of a first stage base. This one here, this is like a mini base. It doesn't fit the definition of a second stage of a full base, which is why it's not shown as one. And you can see that this is the earnings growth is looking great here. So I'm really liking this stock. I'm definitely gonna, if this goes up another 10%, I'll take my profits again, and I'm gonna keep an eye on this one. So a couple that didn't do so well, PayPal was one of them. PayPal has been trading in this box, and this box doesn't extend out. I have to keep redrawing it, but you can see it's been in this box between like 42 and 37 since February. So it's in a relatively tight range here. It's just been hanging out, and it reported earnings recently. April 27th, reported earnings, and it really didn't do much. It went up, it flirted with this prior high, and then it came down, and now it's just up and down, up and down. So I'm watching for this thing to break out of this box, and if it goes to the downside, I'll be looking to probably short this when it breaks, if it goes through the 200 day. I prefer if it goes to the upside, I'll buy it, and I'll be looking for what it does around the 42 mark, which is its all-time high right now. But I did buy this. I don't remember exactly where I bought this, and I believe I sold on this day when it gapped. This day was a gap down in heavy volume, and although it ended up finishing high in the range, you can see it went up a little bit and then it drifted back down. So I did take a little loss on this one. And then Facebook. I'm keeping a close eye on. I like Facebook. It's got a ton of liquidity. Institutions love this stock, but based on the number of funds that are buying it, and its numbers look great. It's right here. It's only out of a first stage base, and you can see how tight this is trading between 121 and about 115. It is just trading this really tight range here. Again, this box I have to keep redrawing it, but again, when it breaks out of this box, I'm hoping it does it to the upside. I will buy this, and then I'll set my stop to either the top of the box or very close to it, just below it. But right now it's just hanging out. It gapped up on an earnings report here. So if you held it through that or you had it, you would have been happy. Again, I wouldn't take that risk right now. But you can see it, 117 was a high it hit around here. It was the buy point in this cup with handle, and it's finding support right around that 117 mark. So I'm liking Facebook, although I did buy it, and I bought it back here, and you can see it corrected really sharply, and I did have to take a loss on this one. So that does it for market analysis and some recent stocks. So let's wrap up here. Okay, so the call to action is if you found this video on YouTube and you're not a member of the Meetup group, then you can join the group by following the below link. And you do need a free Meetup account to join the group, and it only takes a few minutes to set that up. And if you're asking, well, why should I join this Meetup group if the videos are free on YouTube? Well, files like this presentation are available on the Meetup group, and they're only available to members. So if you wanted to keep a PDF copy of this presentation, you could get that on the Meetup group. You'll also get notified when I post a new presentation or video, whereas you won't get that if you subscribe to the YouTube channel. I think you'll be you can sign up for that notification. If you don't subscribe to it, then you basically wouldn't know when a new video is posted. There were no questions for members from the past month. We did have our first in-person meeting, and we had just a few of us there. And we're going to keep going with these. We're going to keep doing the in-person meetings. We'll give it a try for like 6 months and see how it's going. I'd like to get a little more attendance there, maybe 5 or 10 people, so that we can make it worthwhile. But let's see how it goes over the next 5 months or so. So if I encourage anyone to please attend those meetings, and we'll talk. We'll look at some stocks and talk about whatever. I'll have an agenda, but if people want to talk about certain topics, then we'll certainly do that. And I want to thank Chuck Roman, one of our members, for posting. He posted a number of files this month that are available under the files section of the Meetup page. So that concludes this month's presentation. Next month, I'm going to do an investing book review, and I'm going to talk about watch list management, how to maintain various watch lists, and I'll show you how I do my watch lists. If you have a suggestion for a future topic, please let me know. Send me a message on Meetup, and I'll get back to you and let you know about putting that into a future presentation. And if you have any questions about this presentation or questions in general, again, just shoot me a message on Meetup, and I answer those. They go to my email, and I do answer all those messages. So thank you, and we'll see you all at the end of June. Hopefully some of you can make it to the in-person meetup. I'll be setting out the invite for that very soon. All right, have a great day.